Warren Buffett, the greatest investor of all time, just started buying gold this summer. He bought roughly $500 million of Barrick Gold Corp. But before that, even as soon as 2018, Buffett had a bearish view on gold. He said that gold was pretty much useless and it's just an object that sits there and stares right back at you. And he's held this view since his early days of investing. But in 2020, he's changed his investment strategy and put $500 million into Barrick Gold Corp. And ever since then, it's rode up to $32 per share. And it's not just Barrick Gold Corp that's been going up. All these other gold stocks like K92, Wheaton Precious Metals, and even Kirkland Lake Gold, all these stocks have seen some good price appreciation over the summer. So in this video today, I'll be giving you 7 different reasons as to why you should consider purchasing gold or gold stocks in your portfolio. What's up, you guys? Welcome back to the Fire Grind. My name is Daniel, and on this channel, we talk about the stock market and personal finance. In today's video, we're going to be talking all about gold, as gold has recently become a very hot investment topic. So for the past 10 years though, gold has been fairly stagnant in price, fluctuating between $1,100 and $1,400. And in 2020, it started to make its major breakout, all the way from $1,400 up to a maximum price of $2,000 in the past couple of weeks. So as investors, we should take note of this and see if gold is a good investment for us, even when gold is at all-time highs right now. So the first reason we're going to start off with why you should consider buying gold is because gold recently hit all-time highs of $2,000. So the fact that the price of gold has gone up quite dramatically, I don't think this is any sort of coincidence. So I think gold prices are possibly here to stay for the next little while at around the $2,000 mark. And what this means for gold companies is that their profit margins are going to be a lot greater than before, because the price to produce 1 ounce of gold will likely stay somewhat the same. However, the price of gold is what fluctuates. So when the price of gold continues to rise, the profit margin for the company that produces gold is going to be greater and greater because they roughly have a fixed cost to produce 1 ounce of gold. So let's say the company produces gold for a price of $1,000 per ounce. And when gold was trading between $1,100 and $1,400, that company would have a gross profit of around $100 to $400. However, with gold now skyrocketing up to $1,900, their profit margin on each ounce of gold is $900 now instead of $100 to $400. So you can see why gold companies right now are just skyrocketing to the moon. So the second reason as to why you should consider gold is because COVID-19 has forced a lot of governments all over the world to be printing currency in order to support the citizens throughout this economic hardship. So the fact that governments are printing currency is actually devaluing their currency. And right now, the US dollar is the standard currency that's used throughout the world. However, even USA is printing currency because they're not able to just take money out of the bank and give $2,000 to each citizen for the stimulus checks. But now we must ask the question, what are the consequences for printing currency? Because value doesn't just come out of thin air. You can't just print it and expect people to value it the same. If you have an unlimited supply of a resource, then it becomes less and less valuable. And this is why gold holds its value very well, because gold is very hard to find and it takes a lot of work in order to make 1 ounce of gold. And there is also a finite supply of gold within this world. So the fact that there's a finite supply means that once it's all run out, then you can't get any more. Gold not only gets its value from its appeal, which is one factor of it, gold also has uses in our worlds today. So this brings us to a third reason today. Gold is not just a shiny object, but it also can be used to create value. So there are 2 major industries which gold is used. The first one, you can easily guess it, it's jewelry. And jewelry is not the industry which I'm talking about that has some useful output from it. The second industry that uses gold heavily is electronics. So right now I'm filming on this camera, as well as I have a laptop down here and this microphone. They all probably have some trace of gold in them. According to a Google search, each smartphone out there contains about 0.034 grams of gold inside of it. And right now in 2020, there's predicted to be around 3.5 billion smartphones on this earth. If we multiply the amount of gold in a smartphone by the number of smartphones out there, by the price of gold today, we get the value of gold in smartphones to be around $8.4 billion. And that's only smartphones alone. Think about all the other electronics out there. Think about all your appliances. Think about all the new self-driving cars that are coming out. Think about all the smart home devices and any other general electronics out there that you use from a day-to-day basis. These all contain gold. And the one thing about electronics is that harvesting gold from these electronics, once they reach their end of life, is very difficult. So when gold is put into electronics and those electronics reach end of life, then that gold is probably gone forever until it becomes economically viable or the price of gold reaches a high enough price where it makes sense to harvest gold from electronics. So ultimately, the electronics industry views gold as a consumable. And when the electronics industry consumes gold and it's gone, then the supply of gold ultimately continues to shrink each time an electronic device is made. So if we go back to Economics 101, supply versus demand, the supply of gold is shrinking, and if the demand of gold goes up, then the price of gold goes up. The fourth reason I have for you here today is that the price to produce gold is coming down. So if you're looking at investing into a gold mining stock or a gold company out there, the price to produce gold is coming down each and every day. And that is because the industry is employing more technological advancements like robotics, as well as automation to help reduce the price to produce gold. So the old-fashioned way of finding gold was using dynamite, and people would have to set that dynamite, and people would also have to use pickaxes and dig out the ores. However, nowadays, there are robots for most of these things. Robots could probably set dynamites there, robots can go in to explore to see if there's any gold in caves, and as well as robots can carry gold from the bottom of the cave all the way up to the top. And when a company deploys robotics into the operations, they have a heavy upfront cost. However, over the long term, they don't need to deal with the weaknesses of humans. Humans as employees can get sick, they can also get injured on the job, as well as they can slack off on the job. But a robot, it will be programmed to do what it does, and it will complete the job 99.9% of the time, or at least a pretty high percentage of the time, as long as it doesn't fail. So as the price of gold is coming down, this means the profit margins for these gold companies is ultimately going up. The fifth reason for you guys here is that gold has universal value. Similar to the US dollar, if you carry gold around, which not many people do, but if you somehow carried gold around and you didn't have any local currency, you could probably use gold and trade it for any sort of goods and services out there in a foreign country. So gold is a universally accepted currency out there, and it has its value in all different countries. This is why investors from all over the world own gold in their portfolios. It's not just people in the United States or within Canada or within Europe. Everyone in the world wouldn't mind to have a piece of gold because it has universal value. The sixth reason to own gold in your portfolio is a way of diversification. So typically, gold will trade inversely of stocks. So when stocks tend to rise up, gold will tend to fall back or just hold its value. And when stocks tend to go down in bad economic times, gold tends to rise up or hold its value as well. And that's because investors flock towards gold as a safe haven, but when things are great and frothy in the economy, they will leave the safe haven and put them into higher returning assets. But at the same time, if you're purchasing gold companies will always be producing gold and will continue to sell gold no matter what, unless the economics don't make sense. Meaning that if their cost to produce gold is greater than the price of gold, then they won't produce gold. However, if they can produce gold for less than the selling price of gold, then gold companies will continue to produce gold. The last reason I have for you here has to do with technical analysis. If we look at the chart of gold back in 2011, it hit all-time highs of $1,900, and today it recently hit those all-time highs once again of $1,900 and even passed the $2,000. But in between, there's a long cup that formed. And the bottom of this cup, or the base of this cup, was a very long period of time of roughly around 8 to 9 years. And typically when there's a base for any sort of investment out there, and it's a very long base, the breakout will usually be fairly significant. And this is what a lot of investors are banking on right now, that gold is going to have a breakout very soon. So yes, this recent breakout to $2,000 was considered a breakout. However, gold has had a recent pullback. And for those of you guys who know a bit about technical analysis, we could be anticipating that gold is forming a cup and handle. So the cup was a U shape from 2011 where the price came down from there and went back up in 2020. And then recently in the past couple of weeks, we saw gold have a pullback. And that's the handle portion of the cup. So gold may pull back in the short term from $2,000 all the way back down to $1,700. But then when the cup and handle pattern breaks out, we'll see the handle all of a sudden spike back up, and gold could even go to $2,500, $3,000, $4,000, even some bullish investors think $5,000 per ounce. And what does this mean for gold companies? Again, as I've said before and have been drilling this into you this whole video, is that when the price of gold goes up, the cost to produce gold doesn't go up by much, so the dollar profit margin of each ounce of gold that a company produces goes in step with the price of gold as it goes up. If you got any value from this video, please consider leaving a like on this video as it really helps on my channel, and as well as click the subscribe and notification bell if you're not already a subscriber of this channel, because I have a few gold stocks that I'm going to be talking about in the next couple of weeks that I would highly recommend you watch if you're interested in investing in some gold companies. If you guys have any opinions on gold, let me know in the comments down below, because it's always great to have a discussion with you guys as my viewers to get a broader perspective of what everyone's thinking in the stock market. Keep up the grind and have a great day.